the COVID-19 occurrence, no one was ready for it. And now we're all grabbing at individual pieces of what needs to be resolved. And it's a new iteration of the insurance elephant. It's a huge beast. It's all the pieces that have to come together. And that was somewhat the advent of the 10 Cs project. What do we need to do as an industry, economy, government, persons, insureds, to anticipate what might be for the next one?
This episode of Search with Purpose wouldn't be possible without my day job at Exige International. Exige is an executive search firm providing talent within the Western European market for a whole range of financial services organizations. We, as a group of executives at Exige, believe that recruitment can be done differently. It can be done in a way which serves the needs of both our clients and our candidates, and also the world in which we live. We've committed to not only finding the very best talent available in the world, but also to giving 10% of our search revenue to forest protection charities to ensure that the future generations have these treasures intact and can enjoy them just as we have. So if you'd like to find out more about our work here at Exige, then please do check out our website at exigeinternational.com. That's EXIGE international.com. Or of course, you can find me on LinkedIn, and I'll be very happy to have a conversation. So, welcome to Search with Purpose with myself, William Laitinen. Today, I have the pleasure of interviewing a guest, Patrick Kelahan. Patrick is an insurance and customer advocate who has come to the insurance innovation world later in his career, having spent 2 decades within Allstate Insurance and several years in the US government disaster program. What I love about Patrick is his thinking and unique thinking around a whole range of insurance topics, and particularly through his work as with the handle Insurance Elephant, he has brought forward many very interesting ideas and concepts to the thinking relating to problems that we're having out in the world of insurance right now. So it's my great pleasure to welcome to your podcast today from his home in upstate New York, Patrick Kelahan. Patrick, how are you?
I'm well, Will. And you?
I'm very well, thank you very much.
In your 18-degree weather?
Absolutely. I'm sweating here in England. This is great weather for an Englishman for sure. I'm very happy to get in this sunshine. But I hear it's a little bit more frosty where you are. 1
degree today in April, upstate New York.
Wow. There we go, guys. So, well, hope we're keeping warm. So today's conversation, Patrick, I'm really excited to have this because I think it's going to be touching on a really big and important topic for everybody. It's about insurance in a post-COVID-19 world, the way as a community, as an industry, that we can come together to solve the problems relating to COVID-19. And I really like the thinking that you've been doing and the group of people that you've been putting together to help address this post-COVID-19 world. So in today's conversation, I want to explore those topics, your work as the Insurance Elephant, the 10 Cs model, and anything and everything in between. So Patrick, over to you, sir. Please tell us a bit about your work and how you're coming at these problems.
Yeah, certainly my day job is with H2M Architects and Engineers, pretty good sized firm, almost 500 persons, dealing with the interesting world of engineering. But we also deal with insurance carriers, and that was my bridge from insurance into the engineering world. And as part of that, I began to get involved with insurance, insurtech innovation, networking, and I realized that the wonder of insurance innovation, tech, process, methodology, each player seemed to have his or her own piece of the industry as a whole. And to make a long story short, I saw it as similar to the fable of the 6 blind men and the elephant. Whether you're grabbing the tail or the leg or the ear, you'd have a different perspective. But I knew in its whole, insurance and innovation is the beast, the whole elephant. And that's how the Insurance Elephant came about. It was just accidental. And then it became a theme, and then it became an identifier, a personal brand, whatever you want to call it. But why I think it's meaningful for our topic today is uh, the COVID-19 event occurrence. No one was ready for it. And now we're all grabbing at individual pieces of what needs to be resolved. And it's a new iteration of the insurance elephant. It's a huge beast. It's all the pieces that have to come together. And that was somewhat the advent of the 10 Cs project. What do we need to do as an industry, economy, government, persons, insureds, to anticipate what might be for the next one? And there was the kernel of an idea for the 10 Cs project.
Okay, fantastic. Thank you very much. So let's explore that. I mean, so you've got a premise, right? That there's systematic risk which has been identified and brought to light with this pandemic. There's a huge global catastrophe unfolding before us, and it's seemingly a world which is ill prepared to deal with the financial consequences that relate to a pandemic. And insurance is part of that solution. It has to be part of the solution, but clearly hasn't shown maybe all the leadership it can in being part of that solution. So, yeah, just tell me about your thoughts around that and how the premise of your idea came around and the concept that you're working on at the moment and the people you're working on it with.
Yeah, well, what really highlighted the problem is, as the outbreak spread across the globe, initially it was not only a health concern, which was the terrible, terrible part of it, but you had supply chain disruption in China, a huge supply chain engine for the globe. And that began to trickle through. But then as the health effects started to go around the globe, and it was realized that in order to inhibit the spread of the virus, people had to be distanced. They had to stop doing what they're doing, the interactions, and put all the breadcrumb trail together. And it became a shutdown environment for most economies. And as soon as you begin to shut things down, well, of course, commerce ends and production and all the economic effects. And it became a multi-trillion-dollar problem. So, insured persons, and I was focusing primarily on small and medium enterprises, the SMEs, said, all right, we have to close. Our business is very fragile. We live week to week. We have cash flow disruption. And they reached out to their carriers. And the carriers knew that a pandemic would not be covered. It's just too big. It's like flood risk on steroids, way too large. And it wasn't even an underwriting. It was just a stop. And insurers knew it wouldn't be involved. It was exclusions. It was how coverage runs. There's even very little reinsurance present in the market, which speaks very loudly back through the insurance chain that it's not an expected risk to even slice and dice the risk sharing with. So that huge coverage gap of business interruption, and it's every economy, has significant effects, as we all know. So what do we do? Well, the government says, well, the insurers should pay for it. Well, that would bankrupt the industry, not just the carriers. It would bankrupt the industry. But is there a response mechanism that would be able to deal with the breadth of the economic loss? Well, sure there is. Governments can print as much money as they want. But it takes so long for that effect to reach the market. And you can't do that from the top down. You have to get those funds out from the bottom up. It takes so long, and it takes political will and all that. And there's the real 10 Cs project was, how do we get all these parties to collaborate in anticipation of the next pandemic? Because there will be one, unquestionably. How can we anticipate it? And it can't be just money. It's got to be, all right, how can we analyze the factors that make this happen, starting from in December, if we look backwards, the little triggers that might have been detected in the supply chain, or people not working or people getting sick, and then the cascading effects. And we humans are smart, but we're not as smart as aggregating all the data and then anticipating what effects there might be through artificial intelligence or machine learning. And then governments can respond, but they're ill-suited to do it quickly. and they're ill-suited to do it in any way other than a political way.
You do have a 10 C's methodology that you guys have created, and I'll say who these guys are in a moment. You'll sort of talk to us about the group that you're working with. Could you just introduce the 10 C's methodology to us, please?
Sure. The 10 C's are somewhat the insurance elephant for a systemic risk in a framework that could be used to plan for the next one, engaging all these parties. Number 1 C is the concept. There's a concept to this, which is the whole broad thing in and of itself. Cover is the next C. What would be covered? Steve Evans from Artemis told me early on, it's all well and good to get capital markets involved, but you have to know what you're getting covered in order for any of the other pieces to fall together. So he's a smart guy. The catastrophe, what's going to trigger that cover in a parametric sense? Capacity, is there enough capital capacity to be able to hand this, or a combination with government capacity? Can it be adapted to a captives insurance system? There are captives working now that deal with obviously much smaller pieces. Capital markets, get them engaged in helping finance and hedge the financing of this reinsurance, ILS, catastrophe bonds, etc. Collaboration is a big C. All the partners have to be working towards, a common goal on being able to respond to the next pandemic. Continuity of effort. If you have government involved, there are changes in administrations. There's changes in priorities. There's got to be a way to have continuity of focus, funding, and administration of this with all the other parties. Collection, how does it get paid out if there's the trigger? Is it going to be with tied in with a distributed ledger or blockchain, some other method that's just, as soon as it happens, the money gets to the street. And then contribution, who's helping to pay for it? It's another big one. So there are the 10 C's, the general framework.
Brilliant. Thank you very much. I'd like to sort of get back to sort of part of the early premise, actually, and this is where we maybe we started part of our early discussions a couple of weeks back. That we've identified at the moment that the industry is very much set up on this sort of indemnity insurance model, and it really is proving inadequate to deal with the type of systemic risk that we're facing with COVID-19. It's just too hard, seemingly, for insurers to go through the process of actually measuring the damage that's being caused to companies in a timely fashion that will actually get the funds to them that's going to absolutely materially help their business before they go out of business. And so we have talked about these parametric triggers being part of that solution. So let's talk about that. I mean, the idea of the parametric being a solution for this. And, we kind of briefly touched on through those 10 C's some of the types of things that would be instruments that you could be using to create that. So let's explore this a little bit more. Maybe just sort of, for those of you who aren't aware of this sort of indemnity model versus parametrics, tell us about your thoughts with that, Patrick.
Sure. And the traditional insurance model is indemnity-based. A claim occurs, the terms of a policy are met, the insured proves the loss, and then the insurer pays the loss. But it's in a business interruption sense, proving business interruption loss, it's not like a tree hitting your roof. It's an accumulated loss over time. You could project it, but how do you prove it? What is it? Is it cash flow loss? Is it loss of net profits? Is it loss of gross profits? Is it an accumulation of unpaid bills? Having to adjudicate all of those claims, and there might be tens of millions of them, would be so overwhelming to the insurance industry if everybody had business interruption insurance. In the indemnity model, to prove all of that, I can't even imagine the administrative craziness. But if it's a parametric model where the agreement in the insurance contract says, if X occurs and it's at this extent, there will be an amount that's immediately paid. For example, for COVID-19, if a trigger was, if there are 500,000 persons globally who have been confirmed as having the virus by an authoritative organization, then an amount will get paid to those who have the contract. It could also be broken down into various tranches. Say, for example, if 20% of the supply chain for industry X or for transportation is disrupted and it can be proven, then the person's holding a policy for that part of it would be paid. There are right now parametric pandemic models. The World Economic Fund has it, but it was the trigger is number of deaths. If you hit a certain number of deaths, and then there's a next index, and that's a, well, this is Pat speaking personally, that's a crazy trigger to hinge something on people dying as opposed to the effects. So parametric pays based on a trigger, no question. Indemnity, you have to prove your case.
It does feel like, yeah, I'm sorry. It does feel like when we talk about these parametric triggers, and with the number of deaths trigger, for example, that was utilized, that it is a bit of a blunt instrument. I mean, it does feel like maybe these triggers were created in a world that wasn't really as advanced as we are now, or thinking about parametric insurance in the way that so many insurtechs are. And there just seems to be so much innovation now about the way that we can link certain outcomes, certain instances, measurements to the activation of an insurance policy. I mean, I can think of some very interesting insurtechs who are doing this. For example, dealing with flood risk, and there's a company in the UK called Flood Flash, where
great folks. Yeah, they're really innovative.
Exactly, and they've thought about this instant. Well, yes, normally the normal model would be indemnity, right? You've got to get a loss adjuster around to your house, measure, look at the cost of your floor, your carpets, your kitchen, your doors, all of that stuff. I mean, there's huge cost, huge time, huge disruption. Or, as they've done, install that piece of that smart sensor outside of the house. As soon as the water reaches a certain level, it triggers the payout, and the money can be with you within only a couple of days. And that's the type of solutions I can think of in this sort of post-COVID-19 world, where parametric solutions are going to come into the play. I mean, I personally could see things where maybe they're using, aerial satellite photography to work out the footfall in a certain city to know whether or not a cafe should have its parametric pandemic triggered, which may just not be only that. It could also be the World Health Organization has to also announce a pandemic, so it could be multi-layered, but with triggers that are simple to understand, seem to have a direct correlation to what the customer would see as being relevant and reasonable. So, what are your thoughts on these triggers and the triggers that could be used?
Well, a possible again, I step back and look at initially the supply chain disruption, and with the advent of satellite communication on vehicles and such, and we work in a just-in-time supply environment across the globe. There's a predicted or a predictable model of how things get from factory A to a shipping point and then such. Aggregating those data, and if a trigger hits where the overall flow of material becomes outside of, say, 3 or 4 sigma standard deviation, it might trigger an economic parametric, because there's going to be a delay in Walmart putting the goods to the shelf, and it's going to affect sales. Now, this is just one tiny little piece, but it's a piece that has to be looked at. Maersk has great innovative ways of tracking their shipping across the ocean. Putting all these pieces together, putting AI to work to detecting in retrospect of what started in December in Hubei province and ends up in New York City with 10,000 people who are sick and all the businesses closed. There are pieces that fall into place there. And when you understand how the pieces fall, you can begin to determine what were the key factors that would trigger either economic or health or societal disruption. It's a huge project that's underway, but unless it starts, you can't identify the triggers. You have to go back to all the little pieces. It's easy to say in the US or UK, all these businesses closed, their revenues fell by 50%, and that's the trigger. That's the easy economic trigger. Or the trigger is the government says you have to close your business. And if that's the simple trigger, great. It's easy, it's authoritative, it's measurable. But do you take the big piece, or do you try to understand all the little pieces that go together to create that big piece? And when you can do that, now you can start to anticipate what should we do or have in place to mitigate those effects and try to make the trigger not happen. There's the crazy thought.
I can see when we start talking about parametric insurance, once you kind of demystify it, you can see this yawning gap for innovation that will be filled either by the incumbents or by insurtechs or startups.
It's got to be all of them.
Yes,
it's got to be all of them. Really.
Yeah, I think that comes to nice, Eric. The point, your point on collaboration. I agree with you, and I think this is a great moment in the insurance industry for collaboration. It's a great moment for humanity, frankly, for collaboration, but also in solving the COVID world. Now, there's a couple of tracks we can follow here together, which I would like to go with you. One is about maybe kind of retrospectively looking at what the insurance industry's reaction to COVID has been, and good, bad, ugly. We can discuss that. But then also to look at sort of forward thinking and what are the solutions we're going to need to put together, because I know we've had so few interesting conversations about the capacity that's going to be needed in the industry to create that. And since we spoke only a couple of weeks ago about this initially, it seems like more and more people are coming online with this now, looking at ways that funds could be created, either at the sort of the supranational level. So let's take that one of two ways. So let's talk about so we've talked about the parametric trigger. So let's follow the idea of the capacity that's going to be needed first. So yeah, what are your thoughts around the sort of the capacity that the industry needs to create?
Well, the capacity, we'd like to say it's $2 trillion because that's what we're estimating the loss is. But if and this is a piece that you and I hadn't necessarily discussed, but I pondered, if the countries had available resources for protecting the population, personal protective equipment, ventilators, capacity in hospitals, the ability to react promptly, not having to wait for these things, would it lessen the extent, the breadth and depth of the problem? So what the capacity is going to be affected by how are we planning the next one. If you understand what I'm saying.
I do, absolutely, yes.
That's a key piece that I thought, well, we really need to not have 2 months between when we knew it was going to be a problem and when we reacted to it. But the insurance world kind of knew this was coming because they're smart folks and they're risk predictors, and the big risk modelers see things going, and they have a touch on factors that are happening. So it's certain that in December, the big carriers were saying, this is coming. How's it going to affect, they put the think tanks to work. How's this going to affect what we're doing? Well, it's not physical damage per se. So the direct damage cover doesn't look like it's going to be involved. And we've excluded that from coverage. There's not a physical damage to worry about, but what's the biggest effect? It's going to be disruption to business. Oh, let's look at our business interruption coverage. Oh, yeah, we've already set that up. If there's no physical damage, it's not a covered loss. We've excluded it from cover. We're going to be okay because we don't have an exposure. And I'm not saying insurance companies are bad folks or anything. They're looking out for their business. But that was happening in December, January, February. What steps, though, did the insurance world take to help the business insureds understand what was coming. You can't necessarily hide from it, although that was kind of the thing. But is there a fear if you speak up that there will be litigation, that things will happen? So what's the exposure? People kind of knew what the exposure was, but we weren't ready to react to it because pandemic is such a huge systemic risk that nobody really put a number on it. We're kind of looking backwards. So
you have kind of posited within the 10 Cs document, though, that you believe there'd be something like a 500 billion fund needed, right? That was one of
right. Yeah, if I focus on the U.S. right now, and we look at the small medium enterprises, and you could do the math for any country. If there's 15 million businesses that could be insured for business interruption, and each of them, or say 25 million, whatever number you want to use, and each of them is insured for 25,000 on a parametric basis, it's going to be somewhere between 500 billion and 750 billion. Could be as high as $1 trillion. So how do you anticipate setting that up? The best way, it's going to be guesswork, Will, as you know. Yeah. But if we start now and we say everybody contributes towards it that has a insurance policy, the government participates, and they say somebody contributes, 5 trillion or 5 billion a month for 12 months over 8 years, you're going to accumulate $500 billion. That's the power of compound interest. So if you're planning out in 8 years, maybe our pandemic that needs 500 billion, okay, but what if it happens next year? Where's the backstop for not having 500 billion? Well, that's got to be a government or reinsurance, ILS, capital markets with backstopping by a government. Mm-hmm. It would be a sliding or evolving fund basis for this. But right now, we know that the U.S. had $350 billion in its Paycheck Protection Plan that was exhausted in 2 weeks. 2 weeks with a lot of capacity left. But are those dollars really zero basis dollars? Or if you put 500 billion into the street and the velocity of money says, for every dollar you put out there, it's going to be spent 1.4 times. Now you've got 700 billion of worth of effect out there. It really is a crazy thing to think about. Get the money out in the street promptly, and it's going to move. So you set the number out there. Call it 500 billion. Call it 600 billion. Call it whatever you want, but get it done. The suggestion that a pandemic risk insurance fund would be set up like the terrorism risk insurance fund, that's traditional thinking, putting it all in the government, having the burden of how do you distribute it, how do you administer it. It's a great idea, but it's fraught with administrative difficulties because it's political.
I think we're kind of touching on a couple of very interesting topics here around the power of this, the job that the insurance could be doing, insurance industry could be doing, because we talked about the velocity of money out on the street, and I think if you're a business owner, say, listening to this, who is kind of new to insurance, you may be hearing like parametric and capacity and fund. You think all you're thinking is, right, I've got a policy, I'm paying money into. I've got bills, I've got rent, I've got a family to look after. When am I getting my money? Right? And I want to be able to understand the policy that I buy in a very straightforward way. That when this type of incident hits, I will be covered. And that velocity of money that you talked about, I think, is such an interesting topic. And up until this point, we've been relying on the banks to deal with the problem. Banks to go out and write loans, to do the assessment, do the customer assessment, look at business counts, look at sort of cash flow projections, then do a sort of a risk assessment, and then make the payout. I mean, it's proving to be a nightmare. I can tell you of many business owners that I know, small business owners, who are like pulling their hair out with the system, and then they're showing us in the low single-digit percentile that they're actually being granted loans. Whereas insurance, on the other hand, is very much set up to make payments to clients. if they have the policy and wording in the right way. So I think this velocity of payment is a very interesting topic that you raise, and the way that parametric insurance could be the solution to that. So I've got to say that, and that then links me back into this idea about where the insurance industry is right now, and why maybe this is kind of a very difficult conversation for us to have, and one that I'm finding very difficult to have with anybody in the industry, is why has the insurance industry seemingly been gone so quiet? Why aren't they showing leadership right now? Because if they don't show leadership in helping businesses, in showing forward the sorts of solutions, then they're going to be considered the bankers of the global financial crisis back in 2008, 2009, and be tarnished in that same way. So what are your thoughts to that? Why do you think the insurance industry is being so quiet and is showing this sort of, is hiding from addressing customer needs, as we put it, in sort of dealing with this?
Yeah, it's human nature. If you identify a problem, but you don't have a solution for it, then you're identified with the problem, aren't you? Mm-hmm. So the carriers, after a while, started to get an idea that they needed to do positive things. And I'll kind of work backwards to your question. For example, if Chubb said, all right, we're going to contribute $10 million, and they did, to a fund to help mitigate the effects of the pandemic, that's great. Or the P&C carriers that are rebating premiums. They're getting the message that they need to start to take control of the dialogue in the market. But early on, when they were saying nothing, but they knew the problem was coming, and the first indication that something was going to happen started to come from government, where legislators said, these people are getting their claims denied. We feel the insurance companies should be paying for this, as opposed to the insurance companies taking the lead saying, this is a horrible problem. We recognize it's a problem. Here's how the insurance world works. We know it's too big for us to handle on a traditional basis, but here's an alternative. We're going to team up. We're going to communicate. We're going to create some type of fund to support something. We're going to offer administrative services to the government for distribution purposes. We're going to do something, but they did not control the dialogue. And when you sit back and you've got cash reserves in your bank account that are 500 or 600 billion across, and again, I'm talking U.S., it's easy for a congressman to say, look, you've got $500 billion sitting in the bank. Pay that out. It's the right thing to do. But the insurance world didn't say, if we do that, it's going to compromise every other line of cover that we have and cause the industry to collapse. They missed the chance to control the message.
Yeah, I couldn't agree with you more on that. That control of the narrative is such an important aspect to consider. And by no means am I saying that the insurance industry should have just paid out and taken the fall for COVID-19.
Oh, it would have been terrible.
It would have been terrible. And absolutely any modern economy is built on the premise that if you have great insurance, then innovators and pioneers can go and take more risks. That's how it started back in the coffee houses of Lloyd's of London, right? This idea that the insurance was about enabling pioneers to go and take risks out in the world. So, nobody's arguing with the importance of insurance. I think it's that idea of like you've said, is like controlling, being part of the narrative solution. And I think it's such an interesting position that the insurance industry could play, is maybe early on to have said, look, we've got these business interruption policies. Pandemic cover is not listed in as one of the conditions in which we'll pay out. We can't, but we've got this. Let's just throw a number out. We've got 200 billions worth of coverage to pay out across all these different insurers. If the government steps in and offers to underwrite those policies, we can distribute those funds in a matter of days to those organizations. I mean, that would have been really exciting leadership, and I think a really great way to potentially alleviate the suffering of their customers. I wonder if that's going to happen in some way, shape, or form. I mean, in the UK, I can tell you this, Patrick, that the COVID business interruption loan system is being distributed via banks, and the way it works here is that 80% of the risk is going to be covered by the government, and the other 20% will be put onto the balance sheet of the banks. Now, what that means is happening in real life is the banks are still being very, very slow because they still don't even want that 20%. So now the government are talking about covering 100% of the risk to get those funds moving. Now, wouldn't it have been interesting leadership, not only from insurers, but also from government, to think about just doing that same thing, but saying to insurers, we'll cover 100% of your risk. Pay it out. Let's get the economy moving. Let's get that velocity of funds into the hands of business owners. That would have been a great solution for where we are now. But, let's look ahead to the future now and say, parametric triggers has to play a part in it, right? Has to play a part in this.
Yeah, contrast, again, the UK loan program doesn't sound dissimilar to the US, but even the Paycheck Protection Program said, file for 8 weeks worth of pay to keep your employees on. The government will, if you show that you've kept the employees on, will forgive you for that entire amount. That's a great plan, except the Treasury Department and the Small Business Administration were ill prepared to administer a program like that. So the banks were ready, but the program wasn't. And then it was fits and starts. So there was such an unexpected result from a pandemic that there wasn't any kind of shell of a plan. The crazy thing in the world is that there wasn't a parametric pandemic plan available through Marsh and Munich Re that they couldn't sell to anybody. Yeah, there wasn't a big capacity on it, but it's so outside of our thinking to have such a thing occur. But what's wrong with recognizing, without casting stones, that governments are ill prepared and inefficient in distributing things promptly? Mm-hmm. Insurance companies are well prepared, as you say, to process payments, their information and money. Right? So your suggestion that the insurance companies be the paying vehicle for money that is backstopped by the government is right on point. It's one of those. All right, no harm, no foul. We recognize, we get the money out, boom, it's done in a few weeks, and it's just everybody. But we don't have that now. That's just it's a great idea for the next time. It's part of the 10 C's. You're on board. You're hired.
Thank you very much. And I think this brings us to an interesting sort of next phase of our conversation, really, which is about collaboration. And the reason I'm really excited to be working in the insurance industry right where we are now is there's this really exciting moment, pre-COVID-19, but I think post-COVID-19, where there is innovation happening. There is, this whole raft of new insurtechs coming into the industry. There's the old legacy insurance firms with capital and desire to innovate and change. There's these insurtechs creating, fermenting change. And that's kind of mixing into this really kind of rich ecosystem. And I think also maybe a culture in insurance of more open collaboration. I don't want to sound too idealistic about it, but I do think that's probably my own experience of the insurance industry. So I think we touched on this earlier. So, collaboration, because no one organization is going to have the solution for this. So how have you approached collaboration, and what are your thoughts on collaboration in the industry, and what have you seen?
Well, first off, there has to be a recognition that no matter what goes forward with insurance, parametric programs, whatever, it can't take care of the entire problem. It can't take care of the huge amounts for governments, states, provinces, regions, whatever. You have to choose what piece is a best fit to approach for everybody. So if you focus on, for example, SMEs, it's a fairly predictable piece. And I'm not saying this is what you're doing, but if you're focusing on SMEs and you're focusing on the outcome's going to be a parametric, and it happened tomorrow, what would we need to have in place? Well, we'd need government backstopping for sure. We'd need a distribution method. We'd need to know who's getting it. We would need to have the insurance world, who knows this well, to be a piece of it. Obviously, the insureds would want comfort that there's something in their insurance plan that would reimburse them. The carriers would need to know that, yes, we're great at this, but we're not going to get financially whacked. The capital markets would need to see, this is a great way for us to get into alternate risk financing where we can make some money with the chance that at some point, if a pandemic happens, that perhaps, the principal gets lost to some degree, but there's a way to make money. And in a negative interest world, capital markets want to be part of it. And then once it's out there, now you can begin to slice and dice the risk so that it's hedged properly, that nobody's taking the full hit. And certainly governments, if they understand, right now they understand we're on the hook for trillions of dollars. We're the only source of money. In this new world that's being planned, whether it's the 10 Cs project or something else, we're the backstop for a bunch of other people getting involved. We've got the private industry involved, and there's a profit motive to it, so that's going to be a little more effective than what a government does. And the government's there as the safety net, as opposed to right now, no matter what, the government's on the hook. We could continue doing that with a PRIA or any other plan. Same thing will happen. In 5 years, the government's going to be on the hook, all the governments. There's a better way. And that's collaboration, getting smart people, profit motives, expert at what they do, preparing for it, and continuing to update what that plan is. All things that we don't have right now.
Well, I hope the listeners would agree that I think we've done a pretty good job of identifying the problem. Some of it, where it's coming from. But you and I are here trying to solve problems as well. So
yes,
how can anybody listening to this help you solve this problem? You can explore this however you want. The solution that you have in mind, the solution that you're working towards, any industry actors who can help you solve that solution. Let's talk about that. What could we do together?
Well, there are collaborators that I've identified or have reached out. Really smart people. Dr. Marcus Schmalbach of RiskX. His firm is expert at parametric design, and a project they're working on is intangible asset valuations. Yeah, and I don't want to get into that. That's a whole nother discussion.
We can do that.
Yeah. But his premise of his company is there are alternate ways to finance things, and there are alternate ways to look at what the risk is. So there's a framework that can work through there. Also, really smart data companies, artificial intelligence experts like CareBridge International, Intellect, SEEC, Paper Crane, and there are others. People that do this and have the data lakes available, have the capacity to attack these enormous problems through AI. And of course, AI is not perfect. It might spit out some crazy stuff. But if it identifies one little piece, it's going to be a wonderful thing. There are, I don't know all the companies in the world. I would say if there's any persons who are interested in participating or have ideas, and they could be academicians. There's a fine professor out of Butler University in the U.S. who's dug into this, and unfortunately, his name will escape me because I'm gray-haired and all that stuff.
That's the beauty of podcasting. We can put the memory in the notes later on.
Exactly. Zachary Finn is the gentleman's name.
There he is. Absolutely.
All right. So he's talking about the PRIA. He and I have had some discussion. So if people are interested, I'm available through social media. LinkedIn, Patrick Kelahan. That's simple enough search for me. In Twitter, it's Insurance Eleph, ELEPH1. But if you search for my name, it's in there. I'm constantly discussing these things. The 10 Cs framework is available on my my profiles. So this is a problem that will be best solved through a diverse set of suggestions. All right. But right now, I'll give you an example of what direction I see the industry going. Some great folks in the reinsurance world met this week in London and are talking about establishing a fund through Pool Re for the next pandemic. Well, that's all well and good, but that's where we've always been. It doesn't start from the beginning, anticipating, removing some of the risk, anticipating the risk, being prepared. It's only a indemnity or response model through the reinsurance world. Great folks. I really encourage them to do great things, but this needs to be shaken up, and it's got to be looked at differently if we don't want a multi-trillion-dollar problem the next time it happens.
Absolutely. What I will be doing is putting this onto the Search with Purpose channel that I have as well, so you can reach out to me via LinkedIn and through YouTube and a number of other social media outlets. I'm sure you can find us. If you can't, then you need some serious help with computers. But I mean, the main thrust of your point there, Patrick, which I couldn't agree with more, is the idea that any actors out there in the insurance industry who feel that they could be part of a solution or want to join in the conversation, please do, because there's absolutely no way we can solve this just one person, one organization. It's got to be a collaborative process. And I know, like you've mentioned, some of those fantastic, data firms in this space. There are others as well who I think do some really excellent work around the types of data, types of triggers that could be used to solve a whole range of different scenarios in terms of pandemic coverage. So,
and Will, I'm going to shamelessly put out there that right now, this is a vocational effort on the parts of the people involved. If there are interested companies looking to fund this project for research, it's not like a $10 million thing, but this needs attention now from people who do this for a living, and you can't supplant doing it for a living with doing it as a vocation.
Yeah. Let's be more overt with that, Patrick.
Yes.
You need somebody with some pockets.
I need some money with some pockets, exactly.
You need somebody to step forward and help fund the project work that you're doing. And you are currently, and let's explain it, you're in a group of people at the moment, right, Patrick? It's yourself and some others who are working around this problem in a, as you said, a sort of you're doing it in your spare time type initiative right now. And so those individuals, you guys are forming under a group, right? Can you tell us a bit about that?
Yes. Yeah, the group is the 10Cs project. It'll probably be umbrellaed under RiskX. We've started a website which should be out, but Dr. Marcus Schmalbach of RiskX, Renu and Joseph of Luminant Analytics, that's another AI firm, Chris Franklin of Cambridge International, Lakshan de Silva of Intellect SEEC, my good friend Thomas Verdusco-Weisel in Germany, and I don't want to forget anybody. You have been a great advocate for it, so Exige, and I don't even know how to say the firm.
I'll step in and say Exige. There we go.
Exige International. You've been a great mouthpiece for this, and whoever else. H2M, of course, is supportive, but having the great ideas, it's still an economic world. We need to get a little bit of funding to make it go.
Absolutely, and I think there's no shame in asking for that. I think the minds that you've just outlined are some fantastic organisations in there. In any way that I am being part of that is just to advocate for the concept that as a species, as a society, we absolutely have to come together in these times of difficulty, frankly, and as we see these fracturing of society through the tragedy of pandemics, the best of humanity is best of local communities is how they come together and they renew the bonds which are otherwise going to be fraught and pulled and strained. So if anything that can happen from all of this is that the insurance industry, a whole group of all the people you just mentioned, can come together, collaborate, show leadership. We're already seeing that. Fantastic. So yeah, anybody who can help, anybody who wants to get involved just intellectually, but anybody who has the capital or is interested in discussing it further, please do reach out. You can drop us an email, myself, William@exigeinternational.com. Patrick giving you a few handles. There'll be some in the show notes as well. and please help in the way you can. Well, I think that draws us to a stage in the conversation which is a natural end. I'd like to thank you, Patrick, very much for your contribution today. It's been great talking to you again and hearing the work that you're doing. So thank you very much for all the effort you're making.
You're welcome, and your making this a forum within which we can discuss this is beyond compare with others. So thank you very much for being this important part, and don't be surprised if you're not an important part going forward.
Thank you.
Whether you like it or not.
Absolutely. And with that, thank you very much for listeners as well. I've been William Laitinen, and it's been fantastic Thank you for joining us here on this episode of Search with Purpose. Bye now.